Hello everyone, it's Red with RedDragonLeo.com. It is Sunday night, and let's see, what is it, August the 11th. August the 11th. Recently we have had some news articles come out stating some very bearish things. Zero Hedge published an article talking about this is the fourth Hindenburg omen. And then CNBC had Mark Faber come out and say that we have a chance of a 1987 style crash, and he views the market dumping 20% before the year's over. Now, I want you to know that essentially what they're doing is getting the public bearish. They're telling you to take a very bearish position. You already know from the article that I wrote here, speaking about the WD GAN window that come what is it, the 20 or 16th through the 23rd or something, that we're in a window where we could have a big crash in the market. Well, this is all well known. That was published as well on a site. And unfortunately, when too many people know this, what ends up happening is they manipulate the market and do just the opposite. Now, the fact that they are putting this information out there from CNBC and Zero Hedge and the WD GAN link as well, that was on Futures Mag website. All this is just bad news for us bears. I'm sorry. So what I actually see happening here is just the opposite. I actually think that we are going to, instead of sell off, I think we're going to actually rally. I know that's crazy, but I want to take the opposite side of this, and I think what we're going to have overnight here is we're going to have the futures down, and we've already got them down right now a little bit, and they're going to take out the bulls stops on the downside, and then when we open in the morning we should be down a little bit, not a lot, but essentially what I think they're going to do is just ram this thing up and put in new highs. I know that's going contrarian to what I usually do, but you got to understand what we're looking at right here. If we look at this nice chart laid out here by the chart pattern trader Ron Walker, and draw on it a little bit, I'll tell you exactly what I'm looking for. I am actually looking for an open. I don't know if it's going to open flat right in here, maybe try to go up a little bit, hit that, come back down a little bit in the morning. And I'm looking for them to retest this line right here at 1685. There is a possibility, there is a small possibility that they'll actually dip down below here just a little bit, maybe to 1680, even just a hair lower. I doubt that they're going to go lower than this 1676. I really doubt it. And then I think they're going to run it back up and close the day out fairly unchanged for Monday. And then Tuesday, I think they're actually going to gap it up out of here, and then they could possibly come back, and I'm just guessing on this possibly, they could possibly come back here and retest this line again and end up again unchanged on Tuesday. And all they're doing is setting up the short-term charts so that they can rally this thing. I think by Wednesday, it's nothing but up moves, and I think they're going to go up here Wednesday, hit this double top, and then maybe they chop sideways some of the day on Wednesday, whatever. Then Thursday, I think they're going to bust out to the upside. All this negative news that is on the internet right now about the Hindenburg omen and the fourth time on the Hindenburg omen and the WD GAN story that I posted, I 100% think that it's trickery. When these people come out and get the public bearish. I mean, they're going out of their way. Remember, they own CNBC. That is their propaganda media to mislead the sheep and always tell you to do the opposite. When you got somebody like Mark Faber come out and say, you know, we're looking for a 1987 style crash, you can bet that he is long. You can bet you 100 to 1 odds that he is long, and there's a reason for it. He wants everybody to be bearish so that he can buy the stock at cheap prices, so we can get a rally going. Look at the overall picture here. Look at what we've had over the last. You see right here this head and shoulders. I want to show you exactly. First of all, okay, you go back over here on the smaller term. And again, what do you see? You see a head and shoulders right here. You can make that into a left shoulder. You can make that into a head, and then you can make this into a right shoulder. It is so obvious, it's unreal. That's on the small scale. And then on the bigger scale here, you've got a left shoulder here for this. You've got a head here for the bigger, and then this whole area right here could be considered a big right shoulder. So you've got that on that scale, and then when you go over to the even bigger scale, you can see it here as well. If you look at it here, you can obviously see left shoulder, same thing, head, right shoulder right here, and then the whole thing is left shoulder here on this big move. This whole big move is a head, and so naturally we're looking for a big move down to go down to here to this 1560 area, and then back up to make a right shoulder here. And I'm sorry, but I do not think that they are going to do that. I think they're going to trick everybody. I know I indicated that we were probably going to go down to about 1650 this week. I think that's off. I think the best we're going to see in the market is just a brief moment below that 1685. So on the downside, maybe 1680, but above that 1676. I don't think they're going to break that. So, and if that's going to happen, that's got to be Monday. Sorry, but that's got to be Monday. And then you're going to go up from there. You have to also remember that the market is usually bullish on options expiration week, and that is this week. And they generally put in the low on the Thursday or Friday prior to that. That was last Thursday and Friday. Now they may revisit it tomorrow morning, possibly. And if that is, that's really a good chance for you to go long, because I firmly believe we're going to hit 1720 or better this coming week. And that's obviously SPX. They have been doing nothing but driving everyone crazy, trading sideways, all while this is going down. In other words, they're refusing to let the market go down. They're trading sideways. What is that? We all know the deal, folks. That is a bull flag. You know, the market is going down here on the 60-minute, and what they'll end up doing here is just dipping just a little bit lower. Then they're going to curl this sucker back up and run it back up again. That's how they do it all the time. They trick us, and they trick us. The bears seem like they never get fed. We've went through this before in the past. I remember a time back in 2000, and I think it's 2010. Let's see here. I don't know if he shows it or not on here, but everything to me looks so bearish, and it's exactly the reason it's not going to happen. So if you went back into this time period right in here, you see that right there. You see what they did. I want you to really pay attention to that. This is exactly what they're going to do again. They put in a left shoulder. They put in a head right here. And then they put in a right shoulder right here. And everybody thought for sure this was it. This was their 2009 low. We went up here in 2010. Everybody's seen it. The mainstream media, CNBC, everybody was talking about it. You had all the propaganda talking head, paid for actors and actresses on TV talking about it, and everybody thought it was going to collapse. And what did they do? They went down just briefly, just a little bit past that 1044 and went to 1010, and then they rammed it up, and bam, they did not give the bears anything. They did not give them anything. They just teased them when they went below there by 24 points or something when they went, or 34 points, whatever. They went barely below it. They did not crash like everyone thought was going to happen. And while I thought for sure that we would test this 1650 area here this coming week and then bounce and then try to make lower highs, I'm sorry, but they're not going to let that happen. Not this coming week. There's just too much bearishness going on already, and they don't need to let it happen. When they put out these articles, everybody in the world gets bearish, and you look at this, and again, head and shoulders pattern, looks like it's ready to go. But you have to look at what they've done. I mean, they've held the line while they're working it off. They're literally, as you can see, all the way down here, they're just going down, 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 and just they're going to keep going down until they just curl up and gain some strength. So they're holding the market in this choppy range while the longer term MACDs and daily MACDs and histogram bars are actually going down, working off a lot of the bullishness, and they'll reset them and go back up. You can see it here as well. This actually shows strength because it actually is losing here on the relative strength index, going down, 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 but yet the market stays in this range. And it's holding the line, holding the line. You can see the main important lines right there in that 1690 area. I didn't mean to do that, but you can pretty much see that is where it's at. It's going to hold the line, and if you get down here to 1680, it's a buying opportunity. And there's another reason I said 1676. If you go over here and look right here at the moving average on the 60-minute chart, the 200 period moving average is 1676. I doubt if you're going to get that low on Monday. If you get that low on Monday, it's very, very lucky. It is going to be a buying opportunity, I'm telling you. They are going to trick everyone, and they will not let you make money. They are absolutely going to bust this line. Again, you look right here, 1687. They're going to take that out. Let's look at this on the 20 period, and you can just see right here this area right here. We could make a case right here and kind of go right in there. You can kind of see the area that they're holding support at, and that is just a bullish wedge. If they drop to here, it's a buying opportunity. If they dip down below it just briefly, then it's just a golden opportunity for you. But it's not likely to go below that this area right here. So personally, I think they'll probably open a few points up or down either way, and they'll go down and they'll probably touch this, possibly pierce a little bit, curl back up, and then go out. As this thing goes down, it's just going to make it easier for them to gap up over it. By Tuesday, I expect them to gap up over that line again, and then reset and go, and then go back down again on Tuesday. Like I said, here, go down and then go on up the rest of the week. I wish I could give you some more good news. I know everybody's bears. I'm bearish too, but what they're going to do is they're going to drag this out till October. That is when we're going to have our crash, and you guys all know it. Every one of you knows it. You can just look at Legatus. You can see the most important dates here, October 8th through the 17th, and where are they at? No other place than Rome. That's where the Vatican's banks are. That's where they launder all their money that they steal from sheep and hide it there. They hide it. So this is when we're going to have our final top. My estimate is we'll probably hit 17,000 on the Dow by then. It's crazy. It's unheard of. But when you start hearing all these bearish comments on the market, you absolutely cannot get bearish. You can't do it. You'll end up losing because they're just gonna trick you. They are the ones in control of the media, and they're the ones that are putting this information out there. So if you've got short positions, Monday will probably be your very best day to get out. If you bust this line, look for 1680, no more than 1676 on the downside, maximum on the downside if you're that lucky. That's it, guys. I wish I could tell you we were going to really tank, but it's not going to happen. Sorry, guys. See ya.